Well, it's interesting you mentioned that because even though you're seeing cases rise in some parts of the US and nationally, those case counts are going higher, reopening has continued. And it's really that reopening that it seems that equities are focused on so far. But you're absolutely right. As cases really get to a dire point, you can suspect that reopening is going to slow. And in that case, that recovery of the US economy is also going to be put kind of on pause. But so far, equities are enjoying the fact that restaurants are starting to be able to allow offering outside dining. You're seeing foot traffic increase in stores. So that's been enough to continue that risk appetite.
And let me ask you, we began the week by seeing that big sell down in the futures on this whole issue of whether the trade deal with China is off, and then it was on again, and then I think we understood that there was really no significant change, but you can feel the heat rising in relations between China and the United States at the moment. To what extent do you think risk is appropriately priced around the political issues the US is facing?
Well, when it comes to political issues between the US and China, we think that has become a bigger and bigger concern. You're right that it's been heating up. And now the idea of phase two coming, where it might have something to do with us getting some IP protection from China, it seems a little bit of a very high hanging fruit. And especially with both countries in a recession, the question is, can China even hold up the phase one agreement of buying that agriculture they promised? So it has become a more concern, but whether that risk is appropriately priced, we have to see.
Yeah, let's talk a little bit about the dollar, because the dollar, in a sense, is a measure of risk appetite and also political risk at this point. What's your expectation as to where the greenback goes from here? Because I think baked into a lot of the arguments about risk on, particularly for investing away from the States at this point, is this view that the dollar is going to weaken through the rest of this year. What do you guys think at Wells Fargo?
We think that as the recovery continues, not just in the US, but really globally, that you're going to see a weaker and weaker bid for the US dollar, because the dollar tends to act as that safe haven currency, as you may already know. And you saw in particular when trade tensions rose last year, as trade tensions heated up, the dollar got weaker. But the correlation or coinciding this year has been the other way. As things get dicier, and not just politically, but also, domestically with the recovery, the dollar gets stronger. Now, we've had some great news, including that PMI data, helping, ease that bid for the dollar. So as long as things continue to reopen and we continue to see investors have confidence in spending power, that dollar could see weaker times.